You're probably familiar with the small business regulation. The small business regulation is a simplification rule. That means you don't have to show VAT on your invoices. You don't have to submit advanced VAT returns. You don't have to file an annual VAT declaration. And in general, you have nothing to do with VAT at all and therefore don't have to pay it. That sounds pretty tempting at first. And if you're not familiar with this regulation, check out the video I've linked for you in the top right corner. In that video, I explained the small business regulation, conventional small business regulation in more detail. In this video, however, we're going to talk about a very special form of the small business regulation that hasn't been around for very long. This regulation has only been around since the beginning of 2025, and it's called the EU Small Business Regulation. That's because the classic small business regulation has some issues. Specifically, things get complicated in terms of VAT as soon as you have international business relationships, because the small business regulation basically only applies in Germany. But what happens if you have customers in other EU countries? Does the reverse charge procedure apply then? What about when you exceed certain delivery thresholds through the shipment of goods? There are a whole range of regulations that can suddenly make you liable for VAT in other countries as a small business, almost through the back door. And as a result, you kind of lose the advantage you had as a small business owner that you didn't have to deal with VAT at all. And that's why, since the beginning of 2025, there is the EU Small Business Regulation. This is governed by Section 19a of the German VAT Act, and it's a small business regulation that applies to the rest of the EU. That means you have the classic small business regulation in Germany, and for the rest of the European Union, you can also make use of the EU Small Business Regulation, which then has the very same effect there as well. You then have no obligation in the other countries, Poland, France, Austria, Denmark, Spain, wherever to show VAT, calculate VAT, pay VAT, file VAT returns, or transfer anything anywhere. You simply don't have to do that, because you can also make use of a second small business regulation for the EU, and at its core, it works just like the German small business regulation. This means that if you are a small business owner in Germany, but regularly have customers from other member states of the European Union, you should definitely take a closer look at paragraph 19a and simply make use of the European Small Business Regulation for the rest of the EU as well. That way, you'll also be on the safe side abroad. Unfortunately, the EU Small Business Regulation works a bit differently from the German Small Business Regulation, and that's why we're going to take a look at the important points together in this video. And first, let's address the question, when can you actually make use of this regulation? We're already familiar with the German Small Business Regulation. You can always make use of it if your revenue in the previous year was below 25,000 euros and in the current year below 100,000 euros. With the EU Small Business Regulation, the threshold of 100,000 euros actually applies to both the previous year and the current year. So if last year you made less than 100,000 euros in revenue throughout the entire EU, excluding Germany, that is, in other EU countries, and you also stay below 100,000 euros in the current year, then you can actually take advantage of this EU Small Business Regulation. This means that the thresholds here are actually a bit more relaxed than with the German Small Business Regulation. As soon as you exceed this 100,000 euro threshold, you immediately become liable for VAT on that revenue, meaning at the moment you surpass that amount. Then, of course, according to the VAT laws of the respective countries where you may be liable for VAT, in addition to staying below these revenue limits, you must not be registered as a small business in other countries, that is, in any specific countries. So in Germany, you're allowed to do that, but for example, not in France. This means you have to make use of the EU-wide small business regulation. You can't just pick individual countries and register as a small business there and then use the EU Small Business Regulation for all the others. You are basically only allowed to use the small business regulation in the country where you are based, so in Germany, and then once for the entire remaining EU area. Additionally, you are of course no longer allowed to show VAT on your invoices. This means that if you actively opt out, for example by showing VAT in a country and actually paying it there, that is essentially choosing standard taxation, and then you cannot simultaneously claim the small business regulation for other sales in other EU countries. What isn't allowed is saying you are subject to standard taxation in Germany, that's straightforward in Germany but for foreign countries, which can be a hassle. You apply the small business regulation for the EU abroad. This means you can only use the EU small business regulation if you are considered a small business in Germany. Unfortunately, it would have been a nice solution to be subject to regular VAT in Germany and use the small business regulation for those few EU sales. But unfortunately, that's not possible. If you want to take advantage of this EU small business regulation, you can't do it during your initial tax registration with the tax registration questionnaire. Instead, you have to apply for it separately at the Federal Central Tax Office. They have an online portal, which I'll also link for you below in the video description. You can submit this application there. In this registration form, you have to specify which countries you want to have a business relationship with. You can always expand this later on, always through the same portal. But if, for example, you currently plan to mainly have customers in Spain and Austria, then you simply select Spain and Austria there, and then you can make sales in those countries as an EU small business owner. After you have completely filled out this questionnaire, the Federal Central Tax Office will then process your application and subsequently send you what is called a small business identification number. So it's yet another number. But with this small business identification number, small businesses across the EU can identify themselves as companies, but also show that they operate as small businesses and that it is therefore correct not to show VAT on their invoices. And you should, of course, include this note on your invoices, just like the small business identification number. And as soon as you have this number, your application is basically approved and you can issue EU invoices without VAT as an EU small business. And if you have opted for this regulation, unfortunately, you will have a few tasks to take care of. In fact, you will then have to regularly submit a report to the Federal Central Tax Office stating how much revenue you have actually generated with which countries. This means that while the EU small business regulation allows you to avoid registering for tax in individual countries and exempts you from paying VAT and so on, but instead you have to submit a report every quarter detailing how much revenue you have actually generated in which EU countries. Unfortunately, this is necessary. So it does not spare you a minimum amount of bureaucratic work. For each calendar quarter, you have to log into this online portal once and report your revenues accordingly. This is how the Federal Central Tax Office monitors that you stay below the 100,000 euro threshold. As soon as you exceed this 100,000 euro revenue threshold, you only have 15 days to report this excess to the Federal Central Tax Office, because from that point on you are liable for VAT, at least in the respective countries, and of course you must then indicate this accordingly and pay the VAT. For the ongoing quarterly revenue reports, by the way, you always have 1 month to submit them. The first quarter, which runs from January to March, must be reported by the end of April, that is by April 30th. The second quarter must be reported by July 31st, the third quarter by October 31st, and the fourth quarter by January 31st of the following year. And you continue to do this for as long as you make use of the EU small business regulation. By the way, even if you don't generate any sales at some point, you still have to submit a zero report. Unlike the German small business regulation, you can at any time submit an application stating that you no longer wish to use this scheme and would prefer to be taxed normally, declaring and paying VAT in the respective EU countries. As mentioned, you can submit this application at any time, even online via the Federal Central Tax Office's online portal. The change takes effect from the beginning of the next calendar quarter. For example, if you submit the application April 16th in the second quarter starting July 1st, the beginning of the next quarter, you will be subject to regular taxation and no longer under the EU small business regulation. This means you can also switch back and forth during the year. That's not a problem at all. However, if you are below the thresholds and actively choose to be subject to VAT, then you are bound to that decision for the time being. I hope this video was helpful to you. I can imagine you might still have some questions about this. So be sure to let me know in the comments below and I'll be happy to try and help you further. And if you need support for your self-employment, whether it's a tax advisor, just an accounting program, a bank account, or anything else, you'll find all my recommendations below in the video description. I'll also link them for you here. And now you could subscribe to the channel so you won't miss any updates in the future, or you can just watch one of the other videos right away. For example, this one or this one.